Okay, good afternoon, everyone. So I thought I would do a little video explaining what is actually happening in the markets. And the main thing we're going to be looking at is the fundamental reasons why we're having moves, lagging moves like this in the euro. Well, when I watch other people, explaining, doing their market analysis, they're ignoring one aspect that's really, really important when it comes to trading, and that is fundamental reason. Okay, so when I look, when you, I don't know if many of you guys have heard about what's been happening in France, and that's literally had an impact on the euro. Okay, so as you can see on here in this article written by ING, if you're not um, subscribed to their reports, I would actually encourage you to do so. They send you one every single day, and they give their own perspective on the market. So it's good information to read before you go ahead and be on the markets. But as you can see here, it says in the light of the above, which is the sizing of French political risk, in the light of above, Eurusd is going to struggle to rally this month. We suspect it will continue to trade around 107 or 108 area. So until we see a simmer down of what's happening in France, because what's happening in France is there's been fears of the rise of the right wing parties. And it was not only just in France, as the same applies in Germany. And from my understanding, we've got some political fiasco happening in Belgium as well. So you got three top European countries, and they're going through so much fiscal concerns in their countries, which is literally downplaying the euro. I mean, if you take a look at this move here that happened yesterday because of CPI, where the CPI came below as expected. Euro USD did have an up move, but in comparison to all the other currency pairs, right? Look at USD. So if you compare it to all the other currency pairs, right, the Euro USD move was not as significant. It's not as big comparison to the New Zealand dollar and and the and the Aussie dollar and the pound. All right. So let me just make this so you guys can actually see what I mean. So right, so that was the actual down move, and you can see with New Zealand dollar we literally digested this whole entire move with this CPI release yesterday. And it's the same thing for pound, for Aussie. We got this actual move, this down move here, and that got completely digested. Pound as well. Let me just delete that and get that out of the way for you guys. It's the same thing. It's on the 50-minute time frame, by the way, guys. We had that full digestion of the whole entire move, and then boom, that came in after a CPI release, and it goes on. But when you look at euro, that was not the case, was it? Right? We should have been digesting this whole entire move, but we only digested about, I'll say about 60% of this whole entire move. So that basically kind of tells you that this falava here, right, what's happening in Europe, the fiscal concerns of what's happening in Europe are affecting the euro negatively. So when it comes to trading the euro, right, let's say for example we had positive US data. Let's say the CPI came out yesterday and it showed that inflation is still hot. Then this currency pair would have been really good to trade. It would have been good to sell euro against the dollar. But buying the euro against the dollar at the moment is a bit of a risk, right? So when it comes to trading, let's say, the dollar is weak and you're trying to buy against the dollar, your best bet is with the New Zealand dollar, the Aussie dollar, the pound. These three will, they'll give you good profits, but this won't, because it's got other things that are just slowing it down. So yeah, that's what's happening with euro, and another news that came out today was the PPI release. Okay, so let's go on financial news. You can see the PPI. I mean, that came out red across the board. You know, this basically means weaker dollar. Okay, and you know, having read another article by ING, this is quite an interesting read. So, while the Fed signaled yesterday, because there was an FOMC meeting yesterday, he felt the most likely outcome was just one rate cut this year. Chair Powell acknowledged that this is not a plan and they can adjust to the data flow. So we had CPI on Thursday, red, okay, and we had the PPI and the jobless claims, red. And then let's just read what ING said based on what Fed Chair Powell said yesterday. So they can adjust to the data flow. So if we're having CPI red, PPI red, when PPI is the Fed's favorite measure of inflation, that's red. Okay, we believe that we'll end up having to do so. So I've just lost it, guys. I'm getting too carried away. If we do indeed see more 0.2% month on month or below on core inflation prints, unemployment breaking above 4%, and consumer spending cooling further, that should give the Fed confidence to start moving monetary policy from the restrictive territory to a slightly less restrictive territory from September. Okay, so now they're pricing in, right, whether we're going to get a rate cut in September. And when you look at this data here that we just got, so you got that here, look at the CPI, that kind of, you know, we're heading towards something. It just adds to that point that they made where they said, Chair Powell acknowledged this is not a plan and they can adjust to, let me just do that again. They can just adjust to the data flow, right? So that data flow is what matters. So the more we get these 0.2s month on months, we get, you know, unemployment breaking above 4%, a drop in core inflation prints, that is literally going to, that's going to allow people to start pricing in that rate cut, which means we will potentially see a weaker dollar, 100%, a weaker dollar. And alongside it, when we pairing it with other, depending on the situation in Europe, you know, EURUSD could be a buy. We start seeing, you know, a weaker dollar. At the moment, we are on the right path. The PPI came in negative. The unemployment claims came in negative. The CPI also came out negative yesterday. So right now we're on the right track. But if this political fiasco continues in Europe, where we've got problems in France, Belgium, and Germany, then your best bet would be to trade pound. Well, in the UK, we're going to get an election soon. We've got our own little political palavers going on down here as well. Not as bad as France, where they've got right wingers starting to take over. But I'm not going to talk about my political opinions. It's nothing to do with that. So I got to USD. Like I said, you know, the New Zealand dollar and the Aussie. And there's fundamental reasons why I'm saying these two pairs, especially the New Zealand dollar, right? This currency here, right? Specifically the New Zealand US dollar, they're still in that hawkish state, right? So to pair it with US dollar, it's going to be like a monetary divergence, monetary decision divergence of central banks. Okay, so what the RBNZ is doing and what the Fed is doing. So you trade that divergence of the New Zealand dollar being hawkish and still willing to hold. I think the next rate cut for New Zealand is, last time I checked out yesterday, is 2025. The first rate cut is priced in for 2025, and the one for the US dollar is September, presumably September, if things go well data wise. So that's a very good currency pair to pair with. Aussie is also a decent one, but yeah, stick with these two. Right now, Euro USD. Let's just wait. Let's see what happens with the, political palavers that's happening, and yeah, that's what I really wanted to talk about. I'll be posting more videos talking about these type of events, looking at the charts, how to trade it, and how to go about things. I'm probably gonna upload another video on why I'm pretty much interested in New Zealand dollar instead of Euro USD. So thank you guys for watching. Hope you enjoyed the video, and like, comment, subscribe.